What happens in the world will impact you here at home, and its ripple effects will be felt throughout the housing market and your everyday life. So if you're in the market to buy a home or thinking about buying a home, watch this video in its entirety. It's for you. Gas and oil prices have spiked. Food costs have already gone up and will continue to go up. Supply chain issues are abound. Transportation of goods and services will continue to become more costly and bogged down. Also, what a lot of people aren't telling you is that lenders are getting fat at your expense. So be careful who you do business with and make sure that they are not taking advantage of you. Lenders and real estate agents have had a party the last couple of years with pricing going up, people wanting to buy homes like madmen, and tons of people also wanting to refinance to take advantage of these low interest rates. So of course, lenders and agents want to keep the party going, but interest rates are going up and home prices are also going up. And while tons of people are still buying, it's not at the same pace. So realtors and lenders aren't doing as many deals. And I'm seeing real estate professionals, especially lenders, take advantage of some buyers or owners wanting to refinance by charging them more for the loans and inflating line items. Now, you may not be familiar with the line items in a closing disclosure, but I recently saw a lender charge $500 for a credit report. That's insane. Lenders right now are increasing their margins per transactions because the number of transactions have decreased. So be careful and know that everyone who is on your team doesn't have your best interest in mind. Hey family, real quick. If you're new to the channel, I am Sir Ashley. I am both a real estate agent and a real estate investor. And I know that a portion of real estate professionals will not be happy that I shared that with you, but I believe it is in your best interest to know these things. On my channel, we talk about money, real estate, and the Carolinas. So if you want to talk about money, real estate, and want to know how to prepare yourself moving forward, be sure to subscribe to the channel. And if you get any value out of this video, hit that like button and consider sharing it. So as the thumbnail of this video said, there will be pain ahead. Energy costs will increase. Food prices will continue to increase. Materials for home building will continue to increase. And home prices as well as interest rates will continue to increase. In a recent video, I shared with you how I believe the average consumer could cause home prices and goods to level off or even decline. And the solution is to stop spending and stop providing a demand. But that's easier said than done because we are all accustomed of getting what we want when we want it. But the basic principles of supply and demand are at play. So as long as demand outpaces supply, prices will continue to increase. Yes, demand has slowed, but there's still more demand than supply. So if you haven't watched that video of mine, be sure to check that one out after this one. I will link to it in the description below. So I shared with you that pain is ahead, but a large portion of Americans right now are euphoric because just yesterday the job numbers came out. And here in America, we projected that about 440,000 jobs were being created in the past month, but the actual number was much higher than that. It came in around 640,000 jobs created last month. In addition to that, unemployment numbers went from 4%, which is very good, but it went down even lower to 3.8%. Wages also did go up a little bit, but not as much as inflation did. Another positive is that job participation also went up. For months, all we heard about is how employers cannot find workers. And while some employers are still having that problem, job participation is just shy of where it was at in 2019 or pre-pandemic levels. So all of this good news has everyone feeling good. People are getting jobs, they're seeing their wages going up. So while people may feel a slight discomfort of the higher prices, people aren't internalizing that pain or that discomfort, and they're not seeing how it will impact the society as a whole if we do not stop spending. So what does all this mean for the people out there thinking about buying a home or wanting to buy a home? Now, this is just my opinion, so feel free to leave your opinion in the comment section. I believe that you have to do what's best for you and your family. Yes, home prices are going up, but rental rates are also going up, and they're going up even faster right now. If you're on the fence, I say it is better to act now as opposed to waiting and hoping for a housing crash. Because even if home prices level off, We already know that the Federal Reserve and Jerome Powell will continue to raise interest rates. Today's mortgage payment will not be tomorrow's mortgage payment because it will cost you more to borrow the money. Also, remember that we do not live in a vacuum. Yes, all this craziness is taking place around the world, and it's only going to continue to cause everything to get more expensive. But while everything is getting more expensive, you, the consumer, has to know who your competition is and what's out there. There are hundreds of thousands of millennials who are at the ripe house buying age of 30 to 35, and they have been waiting and wanting to buy, and they also have the means to do so. And what we've seen in the past year, and will continue to see, is that they've been willing to flex their wallets and their bank accounts to buy that home that their family wants and needs in order for it to continue to grow. Now, for those of you who are not going to jump into the housing market right now, look, I told you, you have to do what's best for you. And I get it. But know what that means for you. That means you'll be probably sitting on the sideline for the next 18 months. And that's a pretty long time. Now, you may ask, why do I say that? Well, Zillow recently updated their housing market forecast to say that they now expect home prices to increase 17.3% in 2022. You heard that right. Increase an additional 17.3% this year. And in a March 2nd article, Reuters forecasted that they believe house prices will increase another 10% this year. So those of you who are choosing to sit on the sideline, please stand firm in your decision, but know you'll be doing so for at least the next 18 months. And by the time the market is cooled off enough and it's potentially a buyer's market, we don't know where interest rates will be, nor do we know what overlays or additional qualifications the lender will require for you to get approved for a loan. Remember, during the last housing decline or significant slowdown, there were hundreds and hundreds of properties available for sale. But lenders were very selective concerning what it took to qualify for a home loan. So those of you who are sitting on the sideline and going to wait this out, make sure that your credit is in A1 condition and that you have substantial monetary reserves as well as a solid work history. So you'll be able to clear any additional hurdles banks will require of you to obtain a home loan at that time. For those of you jumping into the housing market right now, know that there is risk involved. Know that there's limited inventory. Know that you will probably not get everything on your wish list. Let me repeat that. You will likely not get everything on your wish list. Also, be aware that there are some real estate professionals that are going to try to take advantage of you because you're new to this. Or you might not be new to this, but you aren't in the real estate trenches every day to know how they exactly finesse you out of your money by charging you ridiculous things like $500 for a credit report. Be sure to check out some of my other videos about real estate, money, and the Carolinas. I'm Sir Ashley. Talk soon.